Hey guys, in this video, we're going to look at the cycles in commercial real estate market. And the sale prices of property fluctuate greatly depending upon which the economic phase in that real estate cycle in which it's purchased or the sale is made. And real estate cycles are longer time frames than any other assets like bonds, gold, even cryptocurrency. And research has shown that the complete cycle of a real estate market is about 15 to 18 years with less volatility of prices in the short term. And real estate cycle help determine what kind of return an investor may anticipate in a commercial property. Now, here we're going to look at the four primary phases in real estate cycle, and that includes the recovery, expansion, hypersupply, and recession. An investor is going to know in which phase of real estate cycle that they would most likely want to buy or sell a property. And that cycle of real estate can help advise and decide the pricing demand of that property. So let's first look at the first phase, which is recovery. The recovery phase is the first phase, followed by the recession. In the recovery phase, the real estate market starts to recover from the low demand and low prices and transition to demand and supply slowly. And this can be highly profitable strategy if investing at this time. And it's time where real estate developers buy and build new property as the demand for rental apartments also increase during this phase. Then we get into the second phase, which is about expansion. And the recovery phase is a perfect time for real estate business owners. However, the individual expansion phase is the right time to buy and sell property. The real estate market at this time is fully recovered and starts showing high growth. It's phase that the economy starts to improve, in which GDP growth rate and unemployment rates also go down, and people can buy and sell more properties, and rental amounts are high, and GDP starts growing as well, as which leads to increasing of the demand for properties. It is the right time to use that core property as an investment vehicle for rental income. Therefore, it's a good time for sellers to, instead of take advantage by earning income of those rental properties than selling as they have in the past, maybe. Then we get into the third phase, which is hypersupply. After the high prices and demands of real estate property, the market becomes stable and the rental prices start decreasing, and sellers hold on to those properties thinking the values will keep increasing. That does not happen, and they sell their property in this phase because of fear of recession. And it is the best time to buy and hold property because the new construction and development causes oversupply in the market and the prices decline as well. It is the right time to identify the right property and hold on to it for a longer period of time. Then we get into the last phase, which is this recession. We're all familiar with the recession, which leads to financial crisis because of the oversupply of property, and the property's values go down. During this phase, inflation and unemployment rates start to increase, and people do not have enough funds to invest in real estate assets. Many people who have taken the loans have to default because they do not have the jobs in which they can continue on those payments. However, if you're financially savvy and have a lot saved, then it's best time to invest in real estate. During this period, the sellers want to sell properties, but it's hard to find buyers. Therefore, they have to sell at lower prices. And that's the reason why you can easily get a property at the best location with a minimal amount during this phase. Now, here is some advice overall. Diversify your investment, which helps in the time of recessions. And every investment instrument like bonds, gold, stocks, mutual funds, cryptocurrencies, and technology have their own risk and cycles. And all you need to know is when you want to enter and when you want to exit into those cycles. So I hope this provides you with a good understanding of the factors affecting the cycles of the commercial real estate and pricing. And until next time, my friends, I wish you luck.